What is up, guys? This is Rey-Jay back with another video. And in this, I want to break down what's happening with the overall market, use a very awesome tool known as Forecaster to dissect what's happening with the charts thus far, and then break down what's going to likely happen as time goes on and what Forecaster is telling us about the current setups. Just to know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. Anyways, as far as the market's going, I want to use my replay tool right over here to show you guys something really awesome. So back on Tuesday, SPY was basically attempting to bounce, but we were stuck in this consolidation very close to $687 a share. So that's what we essentially saw back on Tuesday. If I go back to my previous videos, I mentioned on February 24th, 2026, I posted this video where Forecaster was telling us that there was likely going to be some upside coming to the markets. And I drew out this prediction right over here. We drew out this prediction about how we would likely see a rally close to all-time highs. We were talking about how a rally was coming. I drew this out in my previous videos. And what happened to the charts? Well, when we zoom out, okay, we're going to actually go back to the normal chart. This is what we did. We basically started to rally, and SPY got very close to all-time highs. But instead of breaking the all-time highs, I was saying that we had to watch resistance just to be safe. We actually got a rejection so far on the SPY chart, and we're still technically range bound. But overall, we were correct about the rally that came, even though it was short-lived. Now, the question is, what's going to happen moving forward at this point? I want to talk about something very important. So, SPY is range bound. As we approach 695 to 698, we keep rejecting. As we come down to the 670s or even 680 flats, we like to bounce very strongly. So we're completely stuck right now trading sideways. But there is one concern I do have looking at the new setups on Forecaster and looking at the current setup on SPY. It is possible the market tries to see another rally to all-time highs. It's even possible for us to try to break all-time highs and go for that psychological 700 on SPY. It's possible, but the thing is, I think upside is going to be more limited at this point. I don't think that we're going to rally, 30, 40 points to the upside. I don't think it's going to be a massive, massive squeeze now. I think that the squeezes are going to be limited. And if we try to break all-time highs, it's going to be limited as well. Because I believe when you zoom out of the charts, we go to our daily time frame, I think that what's going to happen is that there's going to be a correction coming for the markets within a couple of months. It could be starting as soon as mid-March. It could be starting as soon as April, depending on the timing. But I do think that's very possible, and we have to be very mindful of this. And I think there's a good chance there's going to be some kind of correction. So can we rally again? Like, let's just say that we do try another rally again. It's possible we just continue to consolidate for another couple of weeks, but I don't expect the upside to be that strong. We might try to go back up to all-time highs. That's a big if, but then as time goes on, as we get to mid-March or April, I would not be surprised if we see a very, very big correction, and we're going to likely test at the least our 200 EMA in the 650s or below, especially if we break structure in the 670s. My initial videos were about how there would be a temporary rally coming, followed by a bigger pullback, and I hold the same view, but I do believe that the closer we get to April/May, the more likely it is for there to be a much larger correction in the markets. Another possibility is that SPY could also be forming a left shoulder, a head, and then this is like our right shoulder phase, which could be followed by more potential downside as time goes on. So I just want to put that out there that these are very strong and very probable possibilities looking at the current setups. So one of the questions that many people may be asking is, why do I say that? It's not just based off, my own predictions solely, or just me trying to guess about what's about to happen. This is not just guesswork. This is based off historical data. This is based off what forecasters telling us, and this is based off the current setups, everything combined, which form these confluences. So why might the market get a correction? The first factor is this. I'm now hopping onto Forecaster and looking at the projection indicator. 3 months out, it's telling us that there are some indicators that suggest that there could be some kind of bounce coming, but there will likely be some kind of pullback. We have two scenarios telling us that SPY is going to retest 680 or even dump down to the lower 600s. On the 1 month forecast, we could get a rally back up to the low 700s, but as you guys could tell, upside is more limited. And 2 out of 3 forecasts suggest that there's going to be a correction by the time we get to March/April for not only the 680s, but possibly the 650s, which aligns with the 200 EMA. So now it's telling us that 1 month out and even 3 months out, there's going to be a risk of downside. We could still try to bounce and try to retest the low 700s and break all-time highs, but there's going to be a bigger downside move. The downside is going to be bigger by the time we get closer to April. That is what Forecaster is suggesting. It's using past correlated events to tell us that. And based off what we've seen in the past on the charts, using AI technology, those are some of the most probable outcomes. When you look at seasonality, and that's something very cool about using Forecaster, we could look at what basically happens in the past. If we actually go back to what happened many months out, what typically happens is when you're in the first 4 months of the year, okay, if you look at 4 months into the year, you could see that there's going to be at least one red month that's at least 4% or more. That's what typically happens for the last 10 years. If we go back to 15 years, the same thing has happened. Only 2013 was the only exception. So, for example, in 2012, we had 3 green months. Then by April and May, we actually got a 6% correction. Okay, we started off 2014 with a 3% down January. Then we had many months of flat price action. Then we corrected a bit in July. Going to like 2025, we were red in January, we bounced in February, red in March, and the list goes on. You could see we had some red months. Moving forward, there were lots of times where we already got a big sell off in January, and then the market is just kind of flat as time goes on. But when we go more forward, typically when January is green, okay, when you get a green January, you're going to see some kind of corrective phase by February or March. That is what's pretty much happened the majority of the time. There's only one exception, which is 2019, when we did not turn very red until like May. So that tells us that as we approach that March, April, and May period, we're known for having red during those months, especially if the first 2 or 3 months are green. And it's very rare for us to have 4 months in a row of us just being green to start off the year. I think the odds just favor us being more similar to like 2024, or even something a little bit more different, such as another year where we had like a green January and February, then a red March. So I think that between March and May, based off historical trends, between those months, there's going to be a big red month coming. One of those three is going to be a big red month. I'm not as sure about March specifically, but I do think April or May will be red. And if March is a flat month, then of course April and May will most likely be very red. So, based off historical trends, because the stock market has been so green to start off this year, and because we're holding up quite nicely even heading into February, the odds do favor us seeing some kind of big red month between March and May. That's what the most likely possibility based off our historical trends on the S&P 500. All right, so that tells me that could we try to bounce again? It's possible we just continue to chop around for some time. We could even try to make new all-time highs temporarily, but that move is going to be temporary. We're not going to just rally, rally, rally forever. What's more likely is that we could try to push a bit higher, but then there's going to be a big correction, at least a 5 to 10% correction that's going to be coming, taking SPY to the 650s by sometime, I would say, like between March and May. I would say that aiming for the middle or even later is more lucrative. It's more practical to just be prepared for the later months. So by May, I think we could easily be back in the 650s, and that's when the correction is going to come. I am not saying it's starting now because SPY is not broken structure, but we could be looking for consolidation, even another rally to start off March. It's still possible, but then there's going to be a big correction as we get close to April/May. That's the most likely possibility. All right. So once again, I just think that's what the charts are suggesting. Same thing with the QQQ. We're pretty much just trading sideways, doing nothing for the last couple of months. We're just going back and forth and back and forth. But there is this big gap to fill at 589, and there's another gap to fill at 565 in case 584 breaks. So there is a risk of the QQQ continuing to chop around, but then there's going to be some downside risk. When you look at the projections on the QQQ, this is telling us that we could rally a bit, but then there is a risk of us returning to 685 or at least 605, or sorry, 586, excuse me, guys, or 605. The QQQ projections also look a bit more weaker. And it's not just me saying that based off past correlated events. When we go to seasonality and we go back 15 years, you'll see that, this year we start off with the green January, February is a bit in the red. And typically when that happens, when you have a green January and a red February, if we do close red in February for the QQQ, the odds will favor that we're going to see another red month in either March or April. That's what typically happens. That's actually what's happened every single time for the last 7 years. So, once again, if you have a green January and a red February, that's a very common trend on the QQQ, then either in March or April, you're going to have another red month. And these months sometimes are 7% in the red, sometimes 13% in the red. So there is a very good chance of a 5 to 10% correction coming on the QQQ as we approach, I would say, at least May. I think there's a good chance by May, the QQQ is also looking for a bigger correction based off the data we're looking at. So be prepared, my friends. Could we rally and consolidate for some time? Yes, we can. But we've been stuck on the QQQ as well. We're just going back and forth, back and forth. We've been stuck between the 590s and 620s for pretty much the entire year. And also for ever since like October, it's been like that. So I do think that we could continue this rally. We could push a bit, consolidate for some time. We may even try to rally a bit more. But as we get close to May, be prepared for that 5 to 10% correction that's very likely to come. I think there's a good chance for that. Another ticker that's going to be a good buying opportunity is Tesla stock. I do talk a lot about Tesla because my viewers really want to learn about Tesla. There's a gap to fill at 368. There's also gaps to fill in the 330s. And then if you look at Tesla, there's a larger head and shoulders like pattern. We're also on a large downtrend. If we lose to 200 EMA at 395, Tesla could be dipping to fill some of these gaps in the 370s or even below. So looking at Forecaster, what is Forecaster telling us about Tesla stock? Well, Forecaster is telling us that if you go out like 3 months, for example, well, not 3 months, 1 month, it's telling us that for the short term, heading into March, it sees Tesla kind of like it could rally to like the 430s one more time, but then it's, every single projection is telling us there's going to be a correction coming. It's going to retest 392 or 387 or even as low as 350, likely somewhere in the middle, which would take us towards like the 375 area before a monstrous bounce by the end of March. So Forecaster is telling us a big dip is likely coming to Tesla stock, and this is going to be a big buying opportunity. I know my viewers absolutely adore Tesla, or at least a lot of you guys love Tesla, and a big buying opportunity is likely going to be coming looking at the current setups, at least from what I'm seeing, at least thus far. So keep that in mind. We're still neutral right now. So we'll have to see what happens, at least for now, looking at the current projections. But another thing we could basically do is we're going to see if Tesla's oversold or overbought looking at these indicators on Forecaster. And it's going to tell us using the advanced DPO if there's buy ratings coming. As of right now, we're neutral. We're not in a major buy phase on Tesla yet. It could happen later, but we'll have to wait and see. Also, you could use Forecaster to look at the fundamentals for Tesla to see what's happening with the price action. The average fair value is well below where we currently are, which tells us that if we get some kind of corrective phase, it's going to be nothing more than a buying opportunity. And Tesla is known for being very resilient, so it's going to make a comeback despite any potential corrections. All right. So that being said, you could also use the Forecaster AI models for all kinds of different things. I think that the Forecaster AI agent is just very useful for understanding what's happening with Tesla, and we could use it for all kinds of different things, such as looking at what the scorecard is telling us about Tesla. So if you have questions, for example, right, you could actually like see a lot of answers to a lot of your questions, for example. So you could see what tends to happen to Tesla. What kind of score does Tesla get based off the questions you ask about the company? It gets a 6 out of 10 for that. So in some ways, Tesla is very, very good. Customers tend to speak positively about the company. For example, they get a score for that. The company has survived many difficult times. It's shown lots of resilience. It gets another point for that. But then, do employees stay at the company for many years? I did talk about on my channel many times that many of Tesla's employees have left the company, which is why I did not get a score for that. So when answering a lot of major questions about the company, You could see this is getting a 6 out of 10, which is not too bad for Tesla. It's solid but mixed in terms of its profile, which tells us that yes, it's strong. It's very hard to replicate its capabilities and ecosystem, but there are some weaknesses because once again, there's high employee turnover concerns and there's high dependence on Elon Musk. So keep that in mind about Tesla. Just some things to note, and that's what I really like about Forecaster. The information is very unbiased. It's not just going to tell you everything is good about Tesla. There's good and bad things, but ultimately, we're still very bullish. And if we get a big correction within the next couple of months, a big correction is going to give us a good buying opportunity once again to dollar cost average. And I'm still a massive bull because of the revenue growth that's going to come due to their cybercab, their robotaxi, which is still in development, and because of the Optimus robots. So if there's a correction coming to Tesla to fill these gaps, it's going to be nothing more than a buying opportunity. Last but not least, I just want to say that Forecaster is just very awesome for all kinds of different things, from researching your favorite stocks to also seeing what many politicians are doing. So you can actually look at which politicians are buying which stocks and to what extent based off public filing reports. So you could see which politicians involved. And then you could also go under a politicians and actually search for them. So if you want to search for a politician, what are they doing? Which stocks have they bought? You also have that option with Forecaster. Just another cool thing to note about using Forecaster. So with that being said, I want to thank you all so much for listening. Forecaster is not just about trying to predict everything with closed eyes. It's about looking at the data. What do the stocks typically do given certain months, given how many years have passed? And you could use Forecaster as a very awesome tool to assist your stock research journey. It's very good for understanding what typically happens with the stock, looking at seasonality, and for many different benefits. So with that being said, I thank you all so much for listening. I hope you guys have an awesome rest of your guys' days. Forecaster is very awesome. If you guys want to save 10% on your membership, feel free to check out my link down below to sign up and use my promo code down below. Anyways, with that being said, please check out my link to sign up for Forecaster, and I appreciate you guys so much for watching these videos. I'll be back very soon with another upload tomorrow. Until then, I wish you all the best and peace out.